Do you know that stock markets read each other's mind? When US stock market goes achoo, Malaysia's stock market also caught the flu, especially during volatile and uncertain times like a pandemic or a war. Massive stock sell-off overnight in US caused by a comment by Federal Reserve Chairman. You will wake up to a sea of reds in Asian stock market the next day and vice versa. Such synchronized stock market movement only get more intense with the advance of globalization and tech innovation. Information is readily available at your fingertips, and the speed of information distribution has been faster than ever before in the history of mankind. However, we do observe that over extended period, gaps of stock market's performance started to become glaring, even though they move in similar direction. For example, both US and Malaysian market plunged over 30% at the onset of the 2020 pandemic. You can see similar trends in Bursa Malaysia, KLSE, KLCI. But then US market made spectacular recoveries after that, starting in Q3 2020 up until the end of 2021. But what we see from Malaysia stock market is nothing to shout about. That wide gap can only be explained using principles of economics 101. Firstly, US Federal Reserve, the equivalent of Central Bank of Malaysia, is fond of slashing interest rates to near zero. And to add oil into fire, US Federal Reserve also has that knack for massive QE, quantitative easing programs, also known as money printing, which flooded US stock markets with tons of liquidity or money that encourages Tom, Dick and Harry to jump onto the stocks investing bandwagons, facilitated by stocks trading apps like Robinhood. The domino effects of that boosted consumer sentiment and spurred spending, never mind the inflation, which resulted in so-called US economic recovery. A country economic recovery is largely referring to aggregate earnings growth of all the businesses in the country. In the case of US, earnings, the profits have been consistently rising, and this is reflected in the US stock market prices, the S&P 500 index. Yes, there would be a secondary spillover effect to other major economies like the European market and even perhaps China, but these countries are just getting the short end of the stick. So at times, the economic recovery in Europe or China may struggle at the same recovery momentum, just like what's in the US. How about a small emerging market economy like Malaysia? Well, in contrast, corporate earnings for Kuala Lumpur Stock Exchange listed companies has been on the downward trend since its peak around 2012. Heck, with things like increased material costs and labor costs, earnings and profitability has even shrunk for a lot of companies. So you see, the widening stock market performance gap between US versus Malaysia is evident and justified. Of course, we can assume efficient market hypothesis in this case, but do not confuse earnings, which is the fundamentals, with market valuations, which is commonly measured using price to earnings ratio. Price is what you pay, value is what you get. Price is determined by willing buyer and willing sellers, also known as the demand and supply push-pull dynamics. Just like toilet paper and face mask prices spike when there is shortage at the onset of the pandemic. Now, with supply more than demand, prices fall back down or normalize. Fact is, stocks are just one of the many investment options you can invest in, among others like bonds or real estate properties, in which prices also fluctuate up and down. Money naturally flows into investment types that are perceived of giving the highest return, every other factors being perceived the same. Example, fixed deposit giving you a 2%, but stocks gives you 3%. Now, the perception is That is not attractive enough. People won't buy stocks, so prices stay stagnant. For a second scenario, imagine stocks dividends now at 10%, which is 5 times the fixed deposit rate. Now we are talking. You and everyone else will be motivated to put money into stocks and then rationalize later why it is right to do so. Even though stocks carry the possibilities to landslide down moments after you invest as a retail investor, yeah? The same thing, you have one pretty girl, you got 50 guys trying to win her heart. She can afford to draw Mahawa, and that is why it's expensive. Get it? Give this a like and subscribe if you feel enlightened. More weekly updates from CFO channel in the description below or in the upper right.